Look at this what I did here. I added 3 EMAs with some special settings and combinations, and then I added 2 CCIs with secret settings and combinations, and then I created a very accurate trading strategy based on them. Don't worry if you're on the free version of TradingView, because I will teach you how you can have 3 moving averages and 2 CCIs on your price chart. Just make sure you watch this video until the end, and let's get started. Before we start, if you like my contents, please support the channel by liking the video and subscribing to my channel if you haven't subscribed yet. Alright, first we need to add 3 exponential moving averages to our chart with special settings and combinations. So here we click on indicators and we search ribbon. We add this one, moving average ribbon, which is a built-in indicator on TradingView platform. And now we need to change the settings. So here we go to the settings of the indicator, and here in the inputs tab, first we remove one of the moving averages, because as I said, we need 3 moving averages. The 3 of our moving averages should be exponential moving averages. So here for the first moving average, we set it at EMA. For the second one, also we set it at EMA. And for the third one, it should also be at EMA. 3 of these exponential moving averages should have length of 96. So here for the first EMA, we set the length at 96. For the second EMA, similarly at 96. And finally, for the third EMA, also set at 96. For the first EMA, the source of calculation should be set at high. For the second EMA, it should be set at HLC3. And for the third moving average, it should be set at low. And finally, we go to the style tab and we increase the thickness of the moving average lines so they will be better visible on our price chart. Alright, we're done with the settings of our moving averages, and now we need to add 2 CCIs to our price chart. So here again we click on indicators and we search multiple CCI. We add this one, which is written by Ricardo Santos. Alright, this indicator automatically adds 7 CCI to your chart, but we only need 2 CCI. So here we go to the settings of the indicator, and here in the style tab we remove the extra CCIs because we don't need them. And then we go to the inputs tab, and here for the first CCI we set the length at 11, and for the second CCI we set the length at 200. And then again we go to the style tab, and here for the first CCI we set the color to red, and we also increase the thickness of the line. And for the second CCI we set the color to yellow, and similarly we increase the thickness of the line. And then here for overbought zone, it should be from 120 to 150, and for oversold zone it should be from minus 120 to minus 150. And then here for the color of the zone, we increase the opacity to 70% so they will be better visible on our price charts. Alright, we're done with the settings and combinations of our indicators, and before I teach you how you can find buy-sell signals based on this, I'm proud to announce that recently I published a book, The Art of Price Action Trading, which is a complete guide to price action analysis. The link is in the description and you can get it later if you want to master price action trading. Alright, getting back to our trading strategy. So here we have 3 EMAs with length of 96 with different source of calculation, and you can see that they have created a ribbon on our chart, and the price is moving above and below this ribbon. And here we have 2 CCIs. The red line here is CCI with length of 11, and the yellow line here is CCI with length of 200. This ribbon and this yellow line here will help us with trends, and this red and yellow line together will help us to find buy-sell signals. Let me teach you how you can do it. Let's begin with a short position setup. As I said, this ribbon helps us with trends. When the price goes below the ribbon, it tells us that probably the market is trending down. And in this case, the ribbon will act as a resistance level. When the price is below the ribbon, here we want the yellow CCI line to be below the center line. You can add a horizontal line here at 0 so you can easily track the movement of the CCI lines. This yellow CCI has length of 200. 200, and being above or below the center line, it can tell us about trends. So we want the yellow line to be below the center line, which means that the market is trending down. So until now, we have two signals that the market is probably trending down. One is that the price went below the ribbon, and here the yellow CCI is below the center line. In the next step, we focus on the red line, which is a CCI with length of 34. It is moving faster and it can help us with momentum changes. We wait for the red line to go above the center line. When we have this situation, while the yellow line is below the center line and the price is also below the ribbon, this situation tells us that probably a pullback is forming on the chart. In the next step, we wait for the red line to cross back below the yellow line. When the red line is closed below the yellow line, it tells us that probably the pullback ended and the price is gonna decline more. We enter a short position only if the yellow line is not oversold. In other words, the yellow line should be above this green zone. So when the red line is closed below the yellow line should be between the center line and the green zone. So here the sell signal is confirmed, and in practice we could enter a short position at this point when this new candle was opened. The stop loss above the pullback or above the zone, since it is not very far, and it would be a safer level and profit target at 1.5 risk to reward ratio. I recommend when the price goes below the ribbon, you take a trade only on the first pullback, because on the next pullbacks, you will have higher risk of being at the end of the downtrend. But if you want to take a higher risk, you can also take the next pullbacks. For example, moving on the chart here, you can see that the red line went above the center line, also here, but no success for going below the yellow line. And here, after being above the center line, you can see that at this point the red line is closed back below the yellow line, but the yellow line is already oversold. So this signal here is rejected. We don't take any trade here. Again, you can see that the red line went above the center line, and here we got the red line closed back below the yellow line, and the yellow line is between the center line and green zone. In other words, it is not oversold. So the sell signal is confirmed, and in practice we could enter a short position here with the stop loss above the pullback and risk to reward ratio of 1.5, and this was a profitable trade, as you can see. But as I mentioned earlier, to decrease your risk, it's better to focus on only on the first pullback. Here you can see that after this trade, this was the last movement of this downtrend, and then the price turned above the ribbon. Alright, now let me teach you the long position setup. For a long position setup, we wait for the price to go above the ribbon, and when we have the price above the ribbon, we want the yellow line here to be above the center line. So now we have two signals that the price is probably in an uptrend. In the next step, we wait for the red line to go below the center line. This shows that probably a pullback is forming on the chart, and you can see that the price is also near the ribbon. In this situation, the ribbon is acting as a support level. In the next step, we wait for the red line to cross back above the yellow line. When the red line is closed back above the yellow line, this shows that probably the pullback ended and the price is gonna advance more. We enter a long position only if the yellow line is not overbought. In other words, the yellow line should be below the red zone. So the buy signal is confirmed only if the yellow line is between the center line and the red zone. So in practice, we could enter a long position at this point with the stop loss below the ribbon, and this is a profitable trade, as you can see. After this trade, you can see that again the red line went below the center line. Here we got the red line closed back above the yellow line. The yellow line is between the center line and the red zone. So the buy signal here is confirmed, and in practice we could enter a long position here, and this is also a profitable trade, as you can see. After this trade, you can see that again the red line went below the center line, and here at this point we got the red line closed back above the yellow line, and the yellow line you can see is not overbought. We have it between the center line and the red zone, so another long position could be opened here, and this trade is also a profitable trade. But for this one, this buy signal that we have here, this is not confirmed because you can see that the yellow line is inside the red zone, so we don't take any trade here. As I said, it's better to focus only on the first pullback, because taking the next pullbacks can put you in the risk of being in the last movement of of the price and then turning of the price below the ribbon. Please pay attention that although this trading strategy is very accurate, but it doesn't mean you will not have false signals. There is no trading strategy or method with guaranteed signals, and losing positions are always part of the game, and you need to manage your risk properly. There is a risk management strategy that is called 1% rule and is recommended by professional traders. I have a complete guide on this. The link is also placed in the description, and I highly recommend you to watch it, because without a proper risk management strategy you cannot become a consistently profitable trader. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.